Hi, Scotty, Liberty Home Mortgage. What are we talking about today? We're talking about if one bank or mortgage lender declines you, can you go somewhere else and get a loan and get qualified for a loan? And the answer is yes, okay? So yes, you can. So how does this work? Like a lot of people think that they'll say, well, Hesh, like I'm going for a VA loan. They think, well, it's the government giving the loan. The government does not give you the loan. The VA has a set of guidelines by which a lender who gives you the loan has to abide by if they want it to follow, if they want it to be a VA loan. So ultimately, there's this word you have to learn, and if you're watching me at home, write this one down. It's called overlay. Mortgage companies, lenders, bankers, banks, they do what's called overlay the guidelines. There's actually two things to pay attention to on this one, okay? So if you get declined at ABC, the mortgage company is called ABC Mortgage or ABC Bank, okay? You get declined there. You want to go apply at XYZ Bank. And the question is, well, Hesh, like, can I get a loan at XYZ Bank? So watch this one as an example. The minimum credit score for an FHA loan is 500. ABC Bank might say, good for FHA going down to a 500. We don't want to go below a 640. So we will not go under 640. Now, as long as they do that across the board for everyone, there's nothing discriminatory about it. Good, they're allowed to do it. They can do whatever they want, okay? As long as it's consistently done for everyone, then there's no problem with it. That's called overlaying the guideline. So you're taking the investor, FHA, who's sitting at a 500, and you are saying, we won't go below 640, okay? Now, Bank XYZ takes the same guideline that goes to 500, and they're sitting here saying, we won't go below 580, okay? So suddenly you were sitting at 639, you apply to Bank ABC, and Bank ABC says, you don't qualify for an FHA loan, you're declined. Here's a lot of times what happens. The loan officers who work at Bank ABC, they're in what I call bubble world, okay? They're in Bank ABC's bubble world, and some of them have worked there for 40 years, and they say, no, FHA doesn't go below 640. No, they've been drinking the Kool-Aid at Bank ABC. The fact is, FHA does go below 640. Bank ABC, their employer, does not. Now, naturally, do you think Bank ABC tells its loan officers, by the way, Bank XYZ right down the road, they actually go lower because FHA goes lower. We just choose not to. So the business you are losing that you're working so hard to get actually could be done other places, just not with us. They don't say it like that. They simply tell their employees and their loan officers, no, hey, our cutoff for FHA is 640. That's what FHA goes down to. And notice what I'm saying. That's what FHA goes down to. That's incorrect. No, they don't. FHA goes to 500. So you have a 639. You walk over to Bank XYZ. Bank XYZ goes to 580. Suddenly the next thing you know, you got approved at XYZ, and you're sitting here saying, how is that? Simple. ABC overlaid the guideline from 500 to 640. XYZ overlays the guideline also, but their overlay is to 580. You're sitting at a 639. There you go. You got your loan at Bank XYZ. That's one gigantic reason why one place could decline you and another place can approve you. Let me give you the second reason, okay? This one's definitely a lot harder to understand. Overlays are easy. They're very black and white. At the end of the day, there's somebody called an underwriter, okay? The underwriter makes the final decision on the loan. If the underwriter underwrites the loan, a lot of people imagine underwriters to be these people that God knows live in caves, or they're away from the lenders, or nobody ever talks to them, or who are these people, or whatever. They're just normal people like everybody else out there, and they just go through the guidelines. When you read a guideline book, a lot of a guideline book is up to the interpretation of the underwriter. So for example, every guideline book will say something in regards to credit. Like let's talk about collections, bankruptcies, and bad credit, okay? Every guideline book will say, if there was a time where there was a bankruptcy was found on the credit history of the borrower, blah, 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 make sure that the time since the bankruptcy, no new debt has been taken, no new delinquencies have occurred, and that was a one-time occurrence. Well, it's such a gray area to say, make sure that no new delinquencies have occurred since the bankruptcy. If they have, get a supporting explanation of it that makes sense. Well, what makes sense to you for going delinquent after a bankruptcy might not make sense to me. So suddenly you get into this world where this individual underwriter personally feels that if you went bankrupt, you should not go delinquent on anything after the bankruptcy. Otherwise, you do not deserve a loan. I've seen that happen. Okay, I've had that happen where one underwriter for the same company can be much more conservative and traditional and quote unquote old school than a new underwriter who just got their underwriting license, or vice versa. It could be the underwriter who just got, someone who just became an underwriter. They might be hardcore on the guidelines and say, no, if you were late on anything after the bankruptcy, I'm not approving you. But the underwriter with 30 or 40 years of experience says, ease up, I've dealt with this 1,000 times over. It's not a big deal. So it can go both ways. But the other way that you could get declined at one place and approved at another is simply interpretation of the guideline. The problem is different individuals interpret it differently, even for the same company. So I'll get some people and say, Hesh, like XYZ mortgage is terrible. It's not terrible. It's just the individual who looked at that particular loan and made that decision, you're not in agreement with them, or somebody else at the same company feels differently. So those are the two reasons, and those are the big ones. Those are the big money reasons. Why is it possible to get approved at another lending institution? If you were declined at one, can you get approved at another? Absolutely yes. You should always double check. Never assume that just because one place declined me, another place will decline me. At the same time, if one place declined you, I can tell you this one, it ain't looking that great. Okay, it doesn't make me feel warm and fuzzy, but I will tell you can absolutely look to get approved elsewhere. But keep following these videos because I'm always giving helpful information like this on all of them. Make sure you're subscribing and liking and sharing and commenting, especially if you're a real estate agent. And I'll catch you on the next one. Thanks so much.